What is going on, investors? Hopefully you guys are having a great day out there. Time for a first here on the channel. We're going to talk about SoFi Technologies. This company during the regular session was up 3.33%, but after reporting Q2 earnings and Q3 guidance, which I think disappointed the Wall Street executives a little bit, stock I'm seeing here is down 9%. I'm seeing on this chart we're down about 7.5%, almost 7.75% on SoFi. And you guessed it, we're pulling right back into a technical zone where buyers have stepped in. So this could be a buy the dip opportunity. So even if you want to ignore the fundamentals, we'll talk a little bit about this from a technical perspective and where we could see a bounce with SoFi. Now, what I want to focus on the first half of this video is the Q2 earnings, the soft Q3 guidance. We'll talk broadly about a couple things with the SoFi, so sit back and relax. We'll talk about their business too, since this is the first here on the channel. We'll talk about their lending originations. That is the large part of their business, is actually lending, but the up and coming and maybe even the brighter future is financial services and their technology platform. We'll talk about that as well. We'll take a look at the revenues, the profits from each of that, and then we'll get into SoFi's financials. This company is losing money, so we'll want to factor that into our valuation as well. We've got a $13.5 billion valuation on this one. I don't want to say only 2% short interest, and maybe some of it has to do from a technical perspective. I wouldn't necessarily want to short this at this level, although you break $15 on this one, and it could mean lower prices for SoFi. We'll talk about that more here in a second. So SoFi Technology stock dipped after their soft Q3 guidance. Now, part of this Q3 guidance was, I think you probably saw the other day, that President Joe Biden extended a memorandum that allows student loan payments to, I believe, essentially be deferred for the rest of the year, and in fact into January 31st of 2022. Those were expected to expire, I believe, at the end of the month, and President Joe Biden, obviously due to the health situation, the ongoing challenges that some people are facing, or many people are facing with that, he decided to extend this. Now, I'm not going to get into a political discussion and talk about whether I agree with this or not. Really, honestly, it doesn't matter. It's what the market decides. But what was interesting about SoFi was that they lowered their expectations for guidance based on student loan refinancing revenue by $40 million. So think about that. As the president extended this for several more months, they had to write down their expected revenue on the student loan refinancing, which is one of SoFi's business models. And I also probably think it brings a lot of clients in the door, right? You want to refi your student loan debt? Well, you go out there and look for providers, and SoFi does a lot of advertising in that space. And so it brings you in as a client there, and maybe you stay around, you get a home loan, a personal loan, maybe you trade some Bitcoin or invest in some stocks over at SoFi. And so those are some things to think about. So that revenue, not only that revenue model, but that customer funnel is not happening. So two ways you can think about this with SoFi, right? So you either have the bull case scenario or the bear case scenario, as in life and maybe with stocks as well. So let's assume that the president decides not to extend, flash forward to January 31st, the president decides, yep, now you got to start paying your student loans back. Well, guess what? That's a tailwind for SoFi, because think about all these people that haven't had to pay their student loans for like a year, maybe even longer than that. Well, now maybe they're interested in refinancing, and that could bring a boom of business back to SoFi's way. Now, the other, probably the bear case scenario, is that the president does one of two things. Number one, he decides that he is going to extend it even further past January 31st. Obviously, that will impact SoFi's revenue going forward. The other thing is that President Joe Biden is a part of a party, and I think I don't know for a fact, but I think he's expressed some support, at least members of his party is probably the accurate way to say it, at quote unquote canceling student loan debt, which obviously would really impact, not necessarily, I would assume that means the government would pay off the lenders, but that would, impact refinancing of student loan debt. That would impact the interest that you're going to potentially earn on that student loan debt. All those types of things would be very bearish for SoFi. So politically, there are some risks here. And depending on how you want to think about that, and I'll let you decide completely how you want to think about that, those are some impacts. I didn't want to get into a political discussion, but I felt like with SoFi, you do want to think about that a little bit. Now, the other types of loans, look, it's much bigger than student loans, but student loans, as you can see here, as a portion of their loan business, they've got $2.9 billion worth of loans that they originated in the quarter. Look, in second place is student loans. And imagine if there was a lot of refinancing and all that stuff going on there, probably would have been even higher. But take a look at personal loans. That's coming in at $1.3 billion. That's up 188%. Oh, my personal loan. SoFi is absolutely crushing that business. And what I thought was in the footnotes was really interesting. More than 50% of the personal loans processed by SoFi in the second quarter of 2021 were fully automated. Okay, that's up from less than 30% a year ago. So SoFi is giving out $1.3 billion worth of personal loans, and over half of them were done by machine. I thought that was really interesting. We'll see if this impacts them in the future, see how well these loans perform. Now, in terms of home loan, you also have some, housing exposure with SoFi, right? The refinance market, the home origination. I think if you had prices stay a little bit flat, home price, I don't need to tell anybody, home prices have been skyrocketing. I think if they were to flatten out a little bit, and you increase supply a little bit, obviously those two things are probably related. You get an increase in supply of houses for sale. That might flatten out houses. I actually think that might be good, okay? So while we might not see home price appreciation, I think you'll have more people want to jump into the home buying market if the prices just didn't constantly go up. So I think that will be interesting too. You got some tailwinds, got some headwinds there with SoFi. Now, what I wanted to talk about just really broadly, really quickly here is lending, financial services, and technology platform. Now, I saved you a step on the slides. Lending is its biggest business from a dollar amount and also a profit amount. But financial services in the technology platform over at SoFi is the fastest growing in terms of revenue, and probably an opportunity as well. But I wanted to show you on the lending side, contribution on the profit was 89 million. So this is a big business for them. So that is why we spent a little bit of time talking about the politics around student loan, talking about home prices and those types of things, and even personal loans. I think you can imagine as stimulus checks run out, unemployment checks get reduced or eliminated, well, the need for personal loans will probably go up as well. And so there's some tailwinds here with SoFi, in my opinion. Now you got financial services, a business that is not making money, but it looks like we've turned it around a little bit. We were, losing mid to high $30 million losses on this. It actually turned it around and have the lowest on record here, dating back 2 years. Now, the other part of the business is this technology platform, and that is churning out a profit as well. So you like to see that if this financial services, which I can imagine will eventually turn a profit, it's a company that could be is not absolutely not firing on all cylinders right now. SoFi is not even close to firing on all cylinders right now. And I don't own any shares of SoFi. I don't necessarily have any interest in investing in this company. I'm just telling you exactly how I see it. And I have no reason to be nice or mean to SoFi. I'm just showing you as these numbers are written and how I think broadly about SoFi's lending environment. There are some tailwinds behind this from the lending perspective, but also this financial services business eventually turning a profit. It appears that they're working their way in that direction. Now, in terms of the numbers, so we have this interest income up here. We have our total number of loans. This is for 3 months. Left-hand column is 2021. We've got our total interest income coming in at $84 million. Now we've got our net interest income down here after we net out our interest expense. So we take this 84 million, we minus 28, that gets us net interest income of $56 million. Now we've got other non-interest income in terms of them selling the loans, them charging fees for their platform, those types of things. Total non-interest income came in at $175 million. So you add this 56, this is our interest income off our lending business. Then we've got non-interest income like fees and selling the loans and those types of things. That came in at 175. We've got total net revenue for the quarter came in at $231 million. Last year we're sitting at 115, call that. And then for the 6 months, we've actually seen a doubling as well. Last year we're sitting at 193 million. Now we're up to 427 million. completely not the end of the story, but I do kind of like what I'm seeing here, right? Okay, a lot of money is flowing down. They have multiple business lines going on. That's going to give you tailwind and headwinds on all those things, but I think we can all agree, look, if the president and they don't decide to cancel student loan debt and all these student loans have to refi starting January 22nd of next year or sometime next year, you might extend it, but it may be sometime next year, that could be good. Got the home environment as well, and I think you've got an increasing need for personal loans as stimulus and those types of things start to wane, if and when they start to wane. Now, like I said, not the end of the story. Here's our non-interest expenses. We got technology and product development up big time over the last year. Sales and marketing up big time over last year as well. Cost of operations up considerably. Now look at this. This is probably the most concerning, right? Okay, you got general and administrative. I don't mind when we're spending stuff on sales and marketing. I don't mind when we're spending on technology and product development. These are costs that you have to recognize today, but have a future benefit. Think about a loan officer, okay? Or somebody that closes on a loan. That loan is going to perform potentially over the next 5, 10, 15, and in a mortgage case, 30 years. So you pay for some sales up front to make money on the back end. General and administrative, unfortunately, more than tripled. We went from 53 million up to 171. Part of that could be that SoFi went public, I believe either through SPAC or reverse merger. Excuse me for not knowing that minute detail of how they went public, but I'm assuming a lot of these costs has related to be now becoming a public company, okay? You got to hire CPAs. You got to hire lawyers. You got to have secretaries for all those people, those types of things, right? A lot of back office. So you'd like to see this start to flatten out because over the last 6 months, we went from 102 up to 333. We tripled our general and administrative. Yuck. That's absolutely disgusting because look, for the last, couple months, sales and marketing's ticked up a little bit. Cost of operations ticked up a little bit. Technology and development ticked up a little bit. They have a lot of new products and things that they're launching. They're obviously automating a lot of personal loans. You expect a lot of money to flow in there, but not nearly 3 times the cost that we see in general administrative. So I don't like that. Big red flag. I'd like to see that flatten out in the coming months. As you can imagine, total non-interest expense coming in at $400 million. So while our net revenue was 231, we got a minus 396 million and some unlucky numbers here. And that gets us to a loss before income taxes, sitting at a loss of $165 million. Last year, we were sitting at a loss of $91 million. Notice over the last 6 months, we went from a loss of $200 million up to about $341 million. All things being considered, there are certainly some things I like about SoFi here. Some things where I think if the student loan situation goes in their favor, I think if we see an increased supply of housing getting listed for sale, and we get stimulus and unemployment checks officially cut off and dry, all those things will help their lending business, which I talked about was their most profitable business unit and likely feeds into financial services. That's what SoFi is really trying to do. They're trying to vertically integrate. They're trying to get you in on a student loan, personal loan, or home loan, and then get you to open up a bank account, a stock account, trade crypto. I don't know. There's a lot of different things that they're going to want you to do over at SoFi so they can make money on you. Now, like a lot of stocks, this thing popped and it popped up huge. This thing was all the way up into like $28, $29 range, came all the way crashing down to 15, rallied hard back to 24, 25. We did not get above the previous highs. The previous highs, I would say, are probably right about there, about $26. We didn't get there. That's a lower high. You guessed it. Technically, that tends to send the stock down. Bounced all the way back down here to 15. We came back up here to about 17. And now we're creating a lower low. So here's a high, lower high, much lower high. But guess what? We're right here, right at $15. This stock has bounced hard off this $14, $15. Once back up to 19, again, back up into that $17, $18 range. And then once all the way back up to 24, which is that's like a huge gain on your profits. So with that type of potential, I think there's a trade set up here. We're trading right around $15.64 on there. I have support right at about $15. I think you could go just a little bit lower than that if you felt like it, down to $14, $15, somewhere right in that like low $14, $15 range. risk $1 on this one with upside. You're looking for a break back above this level. So this stock topped out right about here, right at $17. And it made sense, right? This stock came down here to 15, chopped in this $17 range, came down. Once it busted through, once SoFi got above 17, boy, it was off to races. We were back up, almost back up to all-time highs to $24. So that's what we're looking for with SoFi. Okay, we're looking for a bounce here at 15, back up through 17. You get back up through 17. I'd hit a trailing stop somewhere at 17 because it's going to either walk back up to 17 and get rejected down, or it's going to break above it. And there I'd want to have a trailing stop because at some point it'll come back down to earth. That was the absolute stone cold bull case scenario. Now let's assume President Biden extends the student loan debt even further. Home prices go up and dries up the market for people wanting to buy homes. And let's just assume maybe a bill gets passed that cancels student loan debt altogether. Well, then, yeah, this stock's probably breaking $14, $15. And if you do that, you're coming way down on this one, probably south of $13, maybe even south of $12 per share on this one. This doesn't have, in the valuation, it doesn't make a lot of sense. You're trading $13.5 billion valuation. You're losing tons of money. You really only have one or two segments of the business that make really significant amounts of money. You're still building up financial services. But from a technical perspective, it is setting up somewhat decently. So that was SoFi. Please leave a like on this video. It's a first for the channel. This video will likely not get nearly as much viewership as the stocks that we've covered for a long time here on the channel. I just thought this was an interesting story. You weave in some politics. You weave in an early stage company. You weave in some new fintech technology as well. Thought that was interesting. Hopefully you guys enjoyed this video. We'll be back again soon with more. Good luck with your investments.